Economic growth is often a nation's primary objective, one which is supported by low interest rates to boost borrowing, quantitative easing, stimulus packages, and a host of other schemes, all with the intention of presenting a figure which is positive to the mainstream media in order to ensure inflows of capital investment. GDP is considered to be one of the most important indicators of the health of the economy by mainstream analysts. Today we'll discuss exactly what it is, why it's important, and how to dissect the truth about GDP using easy explanations with diagrams. You came here for the truth, so let me unveil that for you. This is part of the Money GPS eCourse. We're looking at GDP today. Let's begin with the mainstream analysts' definition. The gross domestic product is one of the primary indicators used to gauge the health of a country's economy. It represents the total dollar value of all goods and services produced over a specific time period. You could think of it as the size of the economy. Now, I just want to note that this is by far not a complete definition. I'm not going to get into many of the specifics in this e-course. I just want to touch on a few points for the basic person here doesn't want all of those details. So let's go on with this. Usually GDP is expressed as a comparison to the previous quarter or year. For example, the year-to-year GDP is up 3%, and so on. So if you want to read more of the mainstream, you can go on to this link here. But what about what I wrote in my book? GDP is the gross domestic product. And what I say is basically it's the total value of a country's economy. If you want to know what GDP is, basically it's the total value of a country's economy. Pretty simple. And it's obviously used as one of those very important indicators when the mainstream analysts are trying to decide if a country is growing or shrinking. This is the diagram that I used in my book to graphically show individuals exactly what it is. Now, again, an oversimplified version, but you can see at the top, GDP equals government spending plus consumption plus investments plus your exports. This is the general view of the GDP. Showing you a chart out of the St. Louis Fed, but the information is out of the World Bank, if I'm not mistaken. Gross domestic product for the world. So this is the total world GDP. They add them all up together, and you get this number that is approximately $75 trillion, a huge number. And you can see that there are some contractions along the way, particularly in the financial crisis. But for the long term here, you're looking at growth with a fairly steady curve upward. But what I would like to note here is that there's some trickery involved in the calculation of GDP. So let's move into that as we talk about the EU. Sex, drugs, and accounting in Europe. What am I talking about right here? Look at this. Europe has a new source of economic growth. In the next few months, all European Union countries that do not already include drugs, prostitution, and other illegal and gray market businesses in their GDP calculations will have to do so. And this was back from 2014. So this is effective already as of this video right now. They are including illegal activities in order to support their GDP numbers. Now that is what you call a manipulation of the statistics. So when the mainstream analysts look at GDP to determine that the country is growing, they're including this type of data. So this is completely manipulative. Let's move on to this. This is a diagram that reoccurs throughout the Money GPS. What you're looking at right here is how the system is set up. Real assets on the bottom and all of the garbage on top. But when you look at it more closely, these real assets actually include the GDP statistics. But you can see in just this one previous example how the GDP statistics are in fact manipulated heavily. So understand that when you see these indicators coming out, when you see the so-called facts and figures for a particular nation or the global economy, understand that there is manipulation involved. So this diagram basically shows you that you have the real assets on the bottom, and on top of that you have fractional reserve banking, a method that the banking industry has used for quite some time in order to make additional profit. Then on top of that you have the derivatives. I'm not going to get into them deeply into this video here, but as part of the eCourse, I already have a video on that, so you can check it out. But basically, the derivatives have, depending on the calculation, up to 25 times more derivatives than the GDP of the world. It can never be bailed out, and that's what you need to understand. So when we look at GDP, all I wanted to say was that understand that the numbers aren't very accurate. That's all for this video. If you found it informative, please give me a thumbs up. This video was to address the questions on the GDP, how it's calculated, and the basics involved. If you found this video informative, I know you'll find my other videos just as informative. So if you head over to themoneygps.com, there's a link for the Money GPS free e-course. You can click on there, see the rest of them, as well as check out my free ebooks and other things that I have available. Take care.